Hello ladies and gentlemen, global luxury stocks like Hermes, Lvmh, Richemont, should it be in your portfolio? Versus Singapore banks, OCBC, DBS and UOB. Which is better for trading? Which is better to hold for the long term for investment purpose, such that the value can soar, that you can pass down to your next generation? In this video, that's what we're going to grapple into. And please give us a thumbs up, tell your friends about this, and essentially join on the bandwagon for making money in global luxury stocks and Singapore banks. This has been a fabulous week for me as well as GCP Global investors, ladies and gentlemen. How has it been for you? Stocks, that is actually Burberry, BRBY, the trading code, and HERMES, RMA, search on Thursday. Well, let me just show you, in our last class, these are the two stocks that we have mentioned to our investors, as well as in subsequent follow-up with our various investors. Now, look at the Burberry. You can see that the share price when we first recommended in September, yes, look at September, the pricing was close to 500. This is the one-year chart. Now, the one-year chart shows that Burberry have actually locked off almost 50%. There's 50% off in value because of the slow demand in terms of not its trench coat, but its leather bags. As you know, ladies and gentlemen, Burberry was actually trying to push the prices of its various Burberry bags up to the pricing of Chanel, up to the pricing of Lvmh. A bad strategy that even the likes of Laura Piana can easily sidestep Burberry, which is something that we want about. But then the fall in the share price has been tremendous. Now, this is another chart on Burberry. It shows a 5-year chart. What we presented to our investors in the September class, investment class, was that Burberry, if it falls from 2005 or has fallen from 2005, close to 500, that is almost a 80% drop. It presents value, notwithstanding its short-term problems will not be over. And guess what, ladies and gentlemen? We were proven right. We got in at close to 500 plus, and then the share price just rebounded, almost 100%. Once again, ladies and gentlemen, when it comes to luxury stocks, market timing is key. Now, Burberry is one of our trading stocks, but essentially, one of our stocks that we hold for the long term, like the likes of Hermes, is something I want to showcase to you. In fact, I will share with you in this week's video my personal trade. I don't want to share with you the Burberry record because the profits that we make, is really, really tremendous. Because in 4 months, the share price ran from 500 plus when we went in to almost $1,000, ladies and gentlemen. That is a whopping 55% profit gain in just 4 months. Let me just show you instead, Hermes, which you and I know for the last 20 years. We have been buying it and trading it. At least if we've been attending our classes, that's what we've been sharing. At least we've been attending our investors meeting. That's what we've told our investors. Now, essentially for Hermes, we also sold some on Friday, or rather on Thursday, simply because the share price run has been too good. Now, nothing has fundamentally changed in Hermes when the results that's coming out in 1 month's time. It is still expected to post a profit gain of 10.5% for 2024 compared to 2023. And that's going to be driven by essentially 50% on its famous Kelly bag as well as its Birkin bag. You see, ladies and gentlemen, the Hermes, when we first recommended in our September class, if you look at the dotted line over there, it was hovering about 1,009. We told our investors that, look, at 1,009, give or take, plus minus 10, 20, it's a very good value to get in. And essentially, this is what I actually did. I added to my positions, and then, now this is a trading record that you can see, this is a trade confirmation record from one of my private banks, that is, HSBC Private Bank. You can see that on the date of purchase, 6th of September 2024, I bought Hermes International, the second arrow indicating the stock. The third arrow indicates that I bought 50 shares. The consideration that I paid was $97,200. including all the fees, that's commission plus FFR. Yes, ladies and gentlemen, when you trade on the French stock exchange, you pay an additional 0.3 FFR, or what they call third-party charges. Yes, ladies and gentlemen, it is probably one of the few exchanges in the world that charges on top of commission and GST. But, unlike the Singapore Stock Exchange, the Paris Exchange boasts of market world-beating brands like Lvmh, like HERMES, like L'Oreal, all of which we are shareholders, EssilorLuxottica. So if you follow us in our class, you notice that these companies can just soar in value simply because the quality of earnings is there, unlike the companies on SGX. And that's why we've been telling you for the last 20 years since I left the industry, to switch your money increasingly to overseas solid, good growth companies. That's what we did. So what happened on Thursday, ladies and gentlemen? Now, this again is the sale contract on the same amount of shares. That's on 16th of January. That's only on Thursday. I sold the same 50 shares of Hermes at the price of 2,480. So the consideration I've got back is 124,000, including all the fees. I get back 123,837,000.81 in terms of euro. So let's calculate my profit for the trade. So my Hermes sales consideration, including all the fee, is 123,837.81 that I got back on Thursday. My purchase on 6th of September, just 4 months ago, was 97,644.98. Yes, ladies and gentlemen, my profit is 26,192.83 in euro, just in 4 months. And yes, based on the exchange rates today, euro against Sing at 1.406202. Yes, you will say that it is a whopping 36,832.41 profit in just 4 months. Mind you, ladies and gentlemen, in our class, we are very mindful of timing and making difference in terms of the earnings. So the IRR in 4 months for our investment is 26.8%. But if you analyze it in a full year, you get 80.4%. That's like almost doubling, ladies and gentlemen. And that is what we do, ladies and gentlemen. At GCB Global, we advocate, that to grow your wealth, the asset allocation is important. That is into what classes, what asset, what sector, which is what we guide you. Secondly, the security selection. And thirdly, the most important is timing. When to get in, when to get out. Ladies and gentlemen, I'm only showing you a small proportion of what I have for Hermes. Most of my other Hermes stocks are still held, with my private bank, which I will sell progressively if it goes even higher. Yes, noted that it is an investment stock. I still trade it. Burberry was a speculative, high risk, high gain return, and whoa, I just wish that I like to share with you, the profit that we make, but it's just too tremendous. So this week, how has been for us, ladies and gentlemen? 3 words. Okay? Fantastic. A lot of fun. Terrific. Just fabulous. And fantastic. Well, fantastic is just fantastic. Gentlemen, you've been following our class for the last 20 years. Yes, we've been teaching for the last 36 years. So 20 years ago, we practically switched all our portfolio into foreign overseas assets. And Hermes is actually one of our core stocks. You can see that at that time, 5 years ago, we managed to get in at about 600. And right now, it's 2005. That's a fourfold increase. That's how you make and multiply your wealth, ladies and gentlemen. And this is unfortunately where in Singapore, other than the banks, most Singapore stocks cannot deliver this kind of return. So remember last week I talked about banks. Okay, do look at my YouTube video. I did tell you that it's time that I'm taking out profits from DBS Bank because when it hit 44, I made 47% gain just on 1 year's performance, right? And as it go further to 45, 46, 47, 48, I will be taking the rest of my profits out because as you can see, my holdings in OCBC, that's 77,000 385 shares multiplied by the current share price, it is actually worth 1.3 million. So for my same percentage holding, about 7,000, 80,000 of DPS shares, the value is much more. So I need to reallocate my portfolio. And that's what we do in our classes. We advise you basically how to asset allocate. Remember, ladies and gentlemen, in making money, the key thing in returns is asset allocation correctly, 2, timing, and 3, security selection. That's what we cover in detail. So jumping on, if I may, I'm excited to share with you this coming class on 8th of February, where we will be doing in 3 parts. 1, we cover REITs as per normal, as you can see. Then we cover on the US tech sector, particularly focusing on picking picking stocks in the AI world. Well, we have made a lot of money on the Magnificent Seven. For those of you who have been following us for the last decade in tech stocks, now we continue to trade in and out these tech stocks, the likes of your Alphabet, Microsoft, Meta, Tesla, as well as Nvidia. Of course, we have new names, like the chip companies, like some of the not so well-rated stocks, but we reckon will benefit in the AI world. This is what we will share. And then the third one is actually we're going to focus on cybersecurities, because I reckon that the next sector that will deliver well and good returns for you and me, ladies and gentlemen, is in cybersecurity. I just want to show you this exciting chart. Look at the first bar, the black bar. Okay. Now this is a chart from HSBC private bank research, that shows that, in 2021 first quarter, the number of cyber attacks per week on worldwide organizations is about 600. Right now, the number of attack by any cybercrime, it's about 1,600. That's a 1,000 jump, from 600 to 1,006 in a single week, ladies and gentlemen. So be it the traditional network security, be it the endpoint-to-endpoint security, or the application security. That's the kind of network security, this kind of cybersecurity market that we will be talking in detail. Now, ladies and gentlemen, it is paramount, that you have to understand that this is a sector that is growing very fast. Right now, of cyber attack for companies have increased to about 12.5 billion this year. Can you just imagine it? 12.5 billion is how many times Singapore's GDP? And that is the cost of cyber security attack. And so, ladies and gentlemen, you may ask, am I still keeping my OCBC? Yes, I did share it in my last video, as you can see, even though I'm taking profits on DBS. So while this week has been tremendous, as you can see, ladies and gentlemen, I'm smiling from left to right, top to bottom. It's been fantastic, terrific, and fantastic. So fantastic clapping. Fantastic. Flying research, you can see that the revenue is likely to soar from 14.9 billion to 20.7 billion. Ladies and gentlemen, hold your horses there. Okay, what they are saying is that in 1, 2, 3, 4 years' time, the revenue will soar by another 50%, and the EBIT will grow from 6 billion to 8.9 billion. That's another 50% in 4 years, ladies and gentlemen. And the bottom line, the profit after tax will soar from 4.5 billion to 7 billion. This is the forecast from UBS research. Most of the time, UBS research has been proven correct, and essentially I share the sentiment, I share the focus, and I share the numbers. So that's what we look for in our investment classes. We show you world-class companies for investment purposes that you can keep for your children, grandchildren, but more importantly, you can also trade if they go up too fast, too quick, as what HERMES and BURBURRY have shown. So till next week, ladies and gentlemen, hope to see you for our next class on 8th of February. In advance, 恭喜发财，昂包多多来。